Hi, I'm Tom Elliott. Welcome to another financial market update for Hodges Real Estate. Well, I've just returned from 2 weeks in the United States, where I actually enjoyed my honeymoon. Interesting news from the US. There is no doubt the American economy is on the improve now. People are talking about buying houses again. US auto sales are going through the roof. Interestingly, petrol in America has just gone through the politically sensitive mark of $1 a litre. But rather than put people off driving, what it's doing in America is getting them to buy more cars, and in particular, more fuel efficient cars. So there's no doubt at least that the American economy is getting better. This is good for the world economy and very good for commodity prices because, of course, China, which buys a lot of Australia's commodities, needs to sell things to America for its economy to be going okay. All right, so what about the local economy at the moment? As always, quite a few contradictory signals coming out. Now, just a couple of days ago, the March quarter unemployment figures came out, and for the nation as a whole, these were very good. Unemployment in Australia steady at 5.2%, a very low figure. The participation rate was up, that is, more people are looking for jobs, and because the unemployment rate was steady, that means that actually more people were getting jobs. About 1/3 of the 44,000 jobs created were full-time, 2/3 part-time. However, and there is a sting in the tail, for those of us who live in Victoria, the news was not so great. Unemployment here is at 5.8%, substantially above the national average. I think it's going to go well through 6% and possibly as high as 7%. So, good news for all of Australia, not so good news here in Victoria. And let's just turn to interest rates, because the rate of unemployment is a very significant determinant of interest rates. Now, because the rate of unemployment, as I said, is steady at 5.2%, it probably means the Reserve Bank is going to continue sitting on its hands for quite some time. As we know, rates were cut late last year. They've been stuck ever since then. Now, the problem the Reserve Bank has here is that when it looks at the whole country, you'd say that maybe rates don't need to be cut. After all, 5.2% unemployment with inflation at around about 2.6% are both pretty good numbers. But what we actually really need here in Victoria are lower rates, even though the rest of the country probably could stand rates being the same or possibly even a bit higher. Unfortunately, the Reserve Bank doesn't have the ability to set different rates of interest for different states. As a result, even though the economy here in Victoria is weaker than the rest of the country, I'm afraid interest rates are probably going to stay the same for quite some time. That is, unless unemployment over the whole economy starts to increase, which it could well do. As a result of those unemployment numbers that came out a couple of days ago, the Australian dollar has jumped. It had fallen as low as 102.5 US cents. It's now back just under 105 US cents. Again, the dollar and the rate of interest tend to move up and down together. So if people think interest rates are going to stay the same or possibly even rise, then our dollar goes up. If they think interest rates are going to be cut, then our dollar moves down. Having said this, I still think over the next year or so, I think the Australian dollar is going to weaken. Not so much that it will prove less attractive, but I do think that if I'm correct about the US economy, the greenback is going to finally start proving an attractive place for international investors to put their money. So we've got rates on hold, we've got unemployment looking okay, but disturbingly high here in Victoria. What are our governments going to do? Well, at the federal level, it's paralysis. Just today we know that Greens leader Bob Brown, he's decided to resign his spot both in the Senate and as leader of the Greens. I think Bob Brown is resigning because pretty much he's done everything he wanted to do. He's forced the government to introduce the carbon tax. That will become a reality in just 3 months' time, July 1st. We'll have to wait and see what happens in terms of what that does to consumer prices and so forth. You can bet your bottom dollar that electricity prices will rise. They've already been going up a lot. They will go up some more post-July 1. We do know the government is obsessed with creating a surplus next financial year. A lot of that depends on the mining tax, which has been passed through Parliament. However, I don't think the mining companies themselves think they're going to be paying nearly as much tax as Treasurer Wayne Swan has estimated. As a result, I don't think the federal budget is going to go back into surplus next year, despite, again, the protestations that Wayne Swan keeps making. As far as the Victorian government goes, well, Ted Baillieu, our Premier, he is under a lot of pressure. The jobs data isn't good. He also wants to get back to surplus. So what does all this mean for the property market? Well, it probably just means more of the same. Clearance rates over the last couple of months have been steady at around about 60 to 65%. That suggests that the residential property market is pretty much in balance. It's not leaping away, nor is it collapsing in a heap. Interest rates, contrary to predictions I've made in the past, probably stay on hold. So for the 95.2% of Victorians who want a job and still have one, things are actually pretty good. Sadly, I think unemployment's going higher. That says to me that property prices at best will only move up a little bit. Thanks very much for listening. That's been another Financial Market Updates. I'm Tom Elliott and I look forward to your company again for Hodges Real Estate, same time next month.